Good morning. Today is Monday, March 27th. The time right now in Bangkok is 6:38 in the morning. I have to do a recording early because I have a meeting early on in the morning. And let's do a bit of a recap. And on Friday, last Friday, the market actually has stabilized. We don't see the market continue to deteriorate over on Wall Street. We can see in the Dow Jones itself, prices has actually hit a low of 31,429 and has basically stabilized. And we can see that the market has gone to a high of 32,761 before pulling back to a low of 31,805. So this could actually set a stage for another rebound going perhaps into 33,137 to 33,451. So this is a possible three-wave corrective pattern, but overall we do see weakness going into the week itself. So if we have a rebound, this area within 33,140 to 33,450 actually offers a possibility of a short. So look out for the possibility here. Overall, I am a little bit bearish on the US equities because over the weekend we have also been hearing a lot of news about Deutsche Bank. And now Deutsche Bank is a much bigger entity than Credit Suisse. So if Credit Suisse has already become history, there's spillover effect because we have been talking about Deutsche Bank having a lot of toxic derivative in their books, and this may all come to a front if these contagions continue to spread. I think there is a real risk here. Okay, so do watch out for the possibility. Also, of course, we also been hearing a lot of news from the United States about smaller banks and credit unions having a lot of stress, and if the deposit base continue to erode, which it has, to the tune of in the hundreds of billions of dollars has actually left the smaller banks and credit unions are actually quite exposed to the property market in the States, and we have been seeing a lot of delinquencies because of the higher mortgage rate as a result of the Fed very aggressive rate hikes. So this is all coming to a head, and it could actually determine where the market heads going into April. Like I said, we are into the last week of March, and how this market closes at the end of Friday will determine how the market will react into April. And I do see a lot of volatility going into April itself. So I think the market is primed for a lot more gyration going forward. Okay, so be a little bit more aware of the underlying factors that is underpinning global markets right now. Over in the S&P 500, it does looks a little bit more stable than the Dow Jones, and we can see that the possibility of a three-wave rebound is a little bit more distinct in the S&P 500 compared to the Dow Jones. The market went down to a low of 3,808, bounced back to 4,040, bounced, then slapped back to 3,909. Now it does looks like it's getting ready for another bounce, and I think this time it may actually exceed the mid-March high. Sorry, this high here is actually March the 6th high. We may actually see a high going into the end of March itself. So, okay, but again, this three-wave rally, if it happens, is likely to find some kind of technical resistance between 4,140 to 4,195. So this area is an area of vulnerability. I don't expect the market to take up 4,195 though. So if there's going to be a rebound, do watch out for that. Okay. In the Nasdaq itself, this is a totally different structure altogether. We can see the Nasdaq, despite all the stresses going on that affected negatively the Dow Jones and the S&P 500, we saw the Nasdaq 100 actually register a year's high last week at 12,943.6. And of course, over the last trading day into last week, you can see the market actually pulled back a little. But by and large, the fact that you can actually register a new high for the year does give us a glimpse of the dynamics underlying US equities. Most investors have, for some reason, flocked into tech stocks, and that is the reason why we can see the Nasdaq 100 remains very, very firm. And over in Asia, of course, the markets are not open yet. It's still too early. In the Nikkei itself, we can see a little bit of firmness going into the weekend. Market have a high of 27,521, and right now we are in the bracket of prices in which the market could be vulnerable to selling pressures, and then we will see what happens as the market opens later in the day. Okay, over in Hong Kong, we have also noticed that there is a foreign influx of capital into Hong Kong, in particularly the Hong Kong dollar, which may also explain why the Hong Kong equity market is a little bit firmer. You can see the entire week, the Hang Seng Index has been trading to the upside. Could be a reflection of the flight to safety, because when Credit Suisse and UBS actually merged, one of the biggest thing to actually take notice of was that the fact that the tier one bond holders were actually decimated. Those bondholders will actually see their investment zeroized, meaning to say they got nothing back. And this is having a knock-on effect, because we are also seeing over the weekend why Deutsche Bank share prices have actually come off of last Friday, because the tier one bondholders are now in a state whereby they have no confidence that their holdings in these banks, as far as the tier one, now he has spread over to the tier two bonds itself, having there's a lot of liquidation going on. I think bondholders are a little bit afraid that Deutsche Bank would do the same thing as what Credit Suisse did, basically to wipe out tier one bank bondholders, which is something very unconventional, because normally in a case like what we see in Credit Suisse, it's the shareholder who have to take the first blunt of the what you call that, lack of protection before the bondholders. But I think Credit Suisse did something very unconventional, and this is having a knock-on effect on bondholders around the world. So much so that Hong Kong and even Singapore authority have to come in to reassure those bondholders that the shareholders will have to take the first haircut before the bondholders. So this is something very unique here. Okay, so do watch out for this development on this front here. Over in mainland China, we can see the CSI 300 continue to stay firm, but I think upside is actually quite limited. So far, I think the market, for it to actually take up the 4,170 is a little bit difficult at the moment. In fact, I do see selling pressure coming in between 4,100 to 4,140 levels. So in the meantime, I think the market will go sideways between this upper band here and the lower band of 3,009. Okay, so we have see the upper band of 4,001 and the lower band of 3,009. It could be, market could be trading within these two bands for quite some time before it resolves itself to one direction in any one way. Okay, over in energy markets, we also see that the energy market in terms of crude oil has actually stabilized after being sold off aggressively to $64.33, and then you have bounced back to $71.63. Then I think the market right now is getting ready to rebound, and if it's going to be the case, I think the top side here is going to be somewhere around $74. So I am already long crude oil. Hopefully this thing will survive all the way until $74. Over in precious metals, we saw another attempt to take out the $2,000 levels, but did not quite survive, or rather, how should I say it? It did not quite sustain the rally above $2,000. So we can see that both a sort above $2,000 did not quite sustain, and the price come back down. But overall, if we do get a pullback to somewhere around the 1,910 to 1,950 $30 level, I think we should be considering looking at buying signals. Temporarily, for the very short term, I actually went short on the gold market, hoping that the market will do a three-wave pullback here. But by and large, I am very bullish on precious metals, in particularly silver. Silver hit a high of $23.53 over the last Friday, and did a bit of a stabilization. There's hardly any pullback, unlike what we see in gold market. So overall, I am biased to the silver, meaning to say that if the market continues to edge higher, I think silver has a lot more potential. We're also seeing sign that the dollar has stabilized. This is the dollar index on a 4 hours time frame. The low traded was 101.55, and the market has rebounded. Over the short term, I have actually gone long this dollar index, and I think that we could be seeing bottoming out of the dollar sell-off, and maybe the dollar may actually do a technical rebound for now. Let's see whether this actually pans out. of course, when the dollars start to stabilize, all the other currencies that have benefited from dollar weakness now may see the reverse happening. Over in sterling, we can see the high of 123.43 following the market pullback to below 122. So this could actually set the stage for lower prices in sterling. But by and large, you can see that sterling did not suffer that much in terms of the pullback. Unlike what we see in the euro dollar actually pulls back a lot more than what we have seen in the sterling market. Basically, I've already short the euro dollar. The high so far was 109.30. Let's see how far it will go. Basically, I'm thinking, sorry, the low here at 105 may actually be challenged one more time. Okay, so I'm actually quite bearish on the euro versus the dollar. Over in the Aussie market, we can see the bit of a consolidation below 0.6790. So this area will be a big barrier to higher prices. We can see market has not been able to challenge this level for quite some time. Since the middle of the month, we can see the market has been trading between 0.6750 to 0.6560. So between this about 100 point range, market has been sidelining. Over in dollar versus the yen, we continue to see investors are actually flocking to the Japanese yen for safety. And for the short term, I think the dollar versus the yen may continue to see weakness, even if we're going to see a rebound. But I think overall, the flight to safety is currently in play because of the crisis that we are seeing in the banking system, whether it's in the States or in Europe. I think this thing is actually spreading. So the fear of holding on to the dollar is actually quite real, okay, even for the euro itself. So I think for on a comparative basis, it's not that the yen is safer, just that there's this knee-jerk reaction to actually gravitate towards the Japanese yen for safety has been ingrained for sometimes among currency players, okay. So do watch out for the continuation of this trend here. Over in dollar Canadian, we can see that the prices has been locked between 139 and the lower end of 136. Between this 300 point range or more or less the 200 point range, market has been doing very little, very similar to what we see in the Aussie versus the dollar. Unfortunately, I'm still short on the dollar versus Canadian. I just hope to see a marginal low below the 136.30, and I want to get out of this position because it's basically it's going nowhere. Okay, so I believe the money is somewhere else. So in the meantime, let's see what happens. Over in the crypto market, we see the rally in crypto market, especially in Bitcoin and Ethereum, continues unabated. The high traded 29,380 was actually achieved on Friday itself, and the market actually pulls back. I'm technically short the Bitcoin right now, hoping that the market will actually drift lower to $24,000, and hopefully this is where it will stabilize, and I hope that I can see some kind of buy signal here. Maybe I want to go long, but for the time being, I'm basically short the Bitcoin right now. I have no position in Ethereum. Ethereum remains very stable above $1,700. So we can see the high traded was just below 1,900. So between this $200 range, and the market is going to let it go sideways, maybe a little bit biased to the downside. But again, very similar to what I've just mentioned in the Bitcoin. This area, if the market actually pulls back, is an area of opportunity to go long, and that area is between $1,550 to $1,615. So this area is actually an area of opportunity to actually establish long position. But we'll see once the market get there. If it gets there, then we'll make what call it, informed choice as to whether that would be a good choice to actually go long. In the meantime, do take care. I'll be here in Bangkok until tomorrow. So the next update will also be about this hour, and before I head back to Singapore later in the night itself. Okay, so I will see you again in Singapore on Wednesday morning. So in the meantime, you take care and be safe. Bye bye.